Okay, we're going to kick things off. Hey everyone, it's great to be here with you and hope all is well where you are tuning in the world today. Thanks so much for joining the next episode of the Green Note webinar series hosted by Climate First Bank. My name is Chris Castro. I'm one of the founding directors and the chief sustainability officer here at Climate First, and I'm excited to introduce our guests and moderate another discussion on the topic I think that you'll find really enlightening. Today's conversation explores an often overlooked climate solution and one that's really central to the work that we do here at Climate First Bank, and that is our bank accounts. In my experience, when I talk to people about climate action, most think about driving an electric vehicle or installing solar panels on their homes or changing their diet to be more plant-based and composting their food scraps. Maybe it's even making a more sustainable purchasing decision. I do want to make a plug that now at Climate First Bank, customers have access to a new impact banking feature that really helps you make those decisions and understand a bit more about how your transactions are aligning with your values. But all of these actions are super important, but most people don't realize that where we keep our money may have just as much, if not more, of an impact on the climate than many of those daily decisions. And that's why I'm really excited to dive into today's topic, the climate impacts of your deposits. And with me, joining me today, is our partner, TopoFinance, one of the leading organizations pioneering this work. And over the last decade, they've helped to define the concept of financed emissions. They've developed methodologies that really bring these invisible impacts to light. And most recently, Topo was awarded the 2025 Keeling Curve Prize that really recognized some of the leading and most promising organizations and projects that are actively removing, reducing, replacing greenhouse gas emissions in our atmosphere. Next slide. So that's why I'm really thrilled to welcome our guest from TopoFinance. Joining us today, you're going to hear from Paul Moinester, the founder and executive director, as well as Rebecca Self, who leads sustainable finance analytics at TopoFinance. And together, we're really going to be diving into some really interesting topics. So thank you both for joining us and looking forward to hearing from you here shortly. Next slide. Just as a quick overview on the agenda, as mentioned, today we're going to dive into how banking can become a climate superpower, what financed emissions actually mean, and how we at Climate First Bank are leading the charge and helping customers to understand the impacts of their deposits. We're also going to do a little bit of a demo of a new tool that we just unveiled this week called the Deposit Impact Calculator. And we will have a little bit of time towards the end for some Q&A. So we're encouraging you all to write down your questions or place them in the chat, and we'll circle to you towards the end of the webinar. Next slide. And lastly, before we dive in, I think it's important to recognize that this presentation is for informational purposes only. It's not intended to serve as official financial advice, and we encourage you to please consult your financial advisor before acting on any of this information or the insights that are going to be shared. And now, without further ado, I'd like to turn it over to Paul Moinester, the executive director and founder of TopoFinance, to help us really dive into this topic, uncovering your hidden climate superpower. Paul, great to welcome you.
Thanks so much for the warm introduction, Chris. And thanks so much for everybody being here today. Yeah, so as Chris teed up, I'm here to talk about your banking and how it is this hidden climate superpower. And so just a little bit more background on us as an organization. So TopoFinance is a nonprofit. We call this field that we are working to pioneer climate resilient financial management. We primarily work with many of the world's largest companies, helping them align their financial management with their climate objectives. But we also are increasingly working with cities and other types of institutions, as well as individuals. And as Chris noted, we are not financial advisors around all of this. This is just sort of climate advice around finance. We've been sort of recognized for this work and sort of the pioneering nature, not just of the work that we're doing at TopoFinance, but this field as a whole that folks like Climate First Bank are doing playing a very instrumental role in furthering. So just to give a little bit of sense of scale. So when we started this work back in 2022, this was sort of very nascent. Nobody had ever sort of thought about this, known about it, et cetera. But over the last 5 years, we've worked to sort of build this up. So we're currently sort of advising on over $60 billion in cash and investments. And this is how we're a bit unique as a nonprofit, is that we not only do research, but that we sort of then work to take this research and build it into real world applications, primarily, like I said, doing this sort of consulting and advising work with companies across the US and Europe. And so I'm really pleased to be here today, joined by my teammates Rebecca, Self, and Joel Aymon. Uh, Bex and Joel are very much finance people. They have spent their lives sort of in and around the accounting world and in the banking world, and none of this work would be possible without them because my journey into this work was I never thought I'd ever work in finance. I jokingly call myself sort of this reluctant finance bro, but the reason that I'm so excited about the conversation that we're going to be having and the work that we're doing is because I had spent about 15 years working and studying in the climate space before I had any idea about the power of banking as a climate solution. So the fact that you all are here today makes me think that you have some grounding in this, if not a lot. But for me, this was totally new in 2020. And I never thought we'd ever work in this. But when we started really understanding the role that finance play, or I started understanding the role that finance plays as this invisible hand of the climate crisis, but that we have the opportunity to transform it from the invisible hand of the climate crisis into the visible hand of climate progress. It became this very sort of exciting thing, and it totally shifted. My background was in policy and politics. I started my career on Capitol Hill, and I am
Hmm.
sort of a finance bro through and through. I know Chris has very much a very similar journey when it comes to all of this stuff, and so I say all that to say that my hope with this call is that coming out of today, everybody leaves here sort of with all of the good instincts around the finance piece of this, of wanting to work within the financial world. And you can leave all the finance bro vests and all of that stuff on the side. So, but what I learned when so what kind of got me started on all of this was this sort of notion that when we talk about banking, we tend to think of it as this sort of static thing. You put money in a bank, it sits in a vault, and it's sort of a bit of a black box to us as customers as far as what is actually happening with that money. It's not something that not only we as individuals think about, but even corporate treasurers from some of the largest corporations in the world are not thinking about how banks, what they're doing with that money. And it turns out that this is sort of black box that we view this as is actually this invisible hand of the climate crisis. And it happens as a result of this very sort of simple piece, which is that we generate cash and we deposit it in a bank. And then that bank takes that money and they lend it out across the economy. So this is like a very simplified version of this slide, but a lot of that money is going to go to small business loans or home mortgages or commercial real estate or loans to major global corporations. And so as a result of that, a lot of this money, about 5 to 6% on average within these major global banks, is flowing into the energy sector. And so through that, billions of dollars a year, I think in this last year, it was around $865 billion from the world's largest banks were flowing into the fossil fuel industry. And a smaller percentage of that money is flowing into climate solutions like solar and wind, et cetera. And so this function that banks play, and this is not just unique to deposits, it's sort of true with every financial product, is that there's money that's moving from our bank accounts into the real world through these mechanisms, whether they're money market funds or fixed income products, et cetera. And so all of that has a climate impact, and the ability to sort of take that climate impact and make it as positive as possible is really sort of the focus of our work. And so when we started this work, a lot of what was very kind of interesting to us was this macro challenge, which is that the world faces a major capital crisis. When we talk about climate and what we need to be spending on it over the course of the next decades, Bloomberg estimates that between now and 2050, we're looking at about $215 trillion of investment that needs to go into climate solutions. But based on our annual climate investment rate, we're falling $150 trillion short. And so the question is, where is this money going to come from? And what we know, and Chris can vouch for this, having worked in government for a long time, is governments can play a very catalytic role at helping things get started, but we don't have the capacity to bankroll this, whether it's the US government or any government around the world. And so and philanthropy, while very helpful also in this very catalytic phase, is not something that can meet this gap. And so what we realized is that at the end of the day, we actually don't need to create new capital because that capital already exists. It's the money that's sitting on the balance books of major corporations, institutions, universities, foundations, and our own bank accounts that banks are taking and lending out across the economy. And so if we can start putting more of a climate lens on how that money is being deployed into the real economy, we have the opportunity to direct as much of that money into climate solutions as possible. So when you look at that sort of back to that simplistic paradigm of how much are banks lending to green versus sort of the dirty side of all of this, this is once again more Bloomberg data, but by 2030, we need to hit this goal of $4 in green for every dollar in dirty that's being lent by the world's largest banks. And as of 2024, that ratio was about 89 cents of green to $1 of dirty. And so the question becomes, what can we do? Because we are way behind the eight ball here as far as really shifting that ratio and making it so that the majority of our money is flowing into things that are going to advance our climate goals rather than further the climate crisis. And so when you sort of zoom out and you say, okay, I have my money at a major Wall Street bank. What is that money doing? And I threw out that 5 to 6% figure a few minutes ago. But on the whole, so this is across the major Wall Street banks and then the big sort of super regional banks in the US, so banks like Truist and others that are not quite at this globally systemic bank level. About 20 to 30% on average across those banks of our money is then flowing into the world's most carbon intensive sector. So that's into the energy sector, utilities, mining, large scale manufacturing, et cetera. And so whether we know it or not, whether we have voted for it or not, our dollars that are sitting in these major global banking institutions are flowing into these very carbon intensive sectors. And if you were then to go and sort of, and this is our research that we've done, is actually measure the emissions, because every dollar as it is deployed by a financial institution into the real world, it creates a carbon footprint. And what we are able to do is to actually track through a methodology called PCAF, which Bex will get into later. We're able to actually track that dollar and understand what its carbon footprint is. And so if you were to take the 12 largest banks in the US and the 10 largest asset managers, that's like your BlackRocks and Vanguards and Fidelities, and you were to measure the cumulative carbon footprint of those, it would be the third largest emitting country in the world. And that's just the top 22 financial institutions in the US. If you expand it out, there are more than 4,000 banks that get very small, pretty fast. But if you were to expand that out, it's a high likelihood that actually that the US banking and financial sector has a larger carbon footprint than actually the United States as a nation, given the fact that it's not only funding so much stuff at home here in the US, but so much impact globally. And so once again, a few more of these big sort of macro numbers around all of this, which is, so since the Paris Agreement was signed, the 65 largest banks in the world, and this is research that's done by our friends over at RAND, $8.7 trillion of that have flown directly into the fossil fuel industry, and that there's over $22 trillion of exposure to these carbon intensive sectors across the world's largest banks, asset managers, and insurance companies. And when you think about this, and this is something that when I often doesn't matter if I'm talking to a treasurer from a major global company or I'm just talking to a friend at a dinner party, when we start talking about there's all these emissions that stem from this banking, the majority of people will think, well, it's got to be from all of the AI use that the banks are doing, or all of the the bank branches, are all the energy that goes into managing our money and the electronic transfers and all of that. But in reality, the lending, and in fairness, this stat was created before the big AI boom, but it'll still be orders and orders of magnitude higher. But on average, about 700 times of the emissions stem from bank lending as opposed to everything else banks do combined. So that's all of their big branches, all the electronic transfers, et cetera. Their lending is where the lion's share of the impact is. And so these are all very big, sort of scary numbers. And when we were sitting there in 2021 trying to figure out, well, it's helpful to know that my bank might be lending all of this money to fossil fuels, but what does that mean for me as an individual customer? How does it help me inform and better understand what my climate impact is? But also as a finance organization, how do we better inform others around what impact this is having for them and how it relates to sort of their other climate decisions and how they can sort of weight this in terms of the need to take action and the impact they can have by taking action, et cetera. We started kind of asking these questions. And so, for me, and I often sort of tell this story that when I moved to Seattle in 2015, I restarted my whole life coming out of grad school, and I sort of had to buy everything. And so I starting from scratch. And so I got my apartment that was in a LEED certified building. I was close to transit, so I could take the bus all the time. It was very walkable, bikeable. I got all my like seventh generation soaps and my organic sheets and my used furniture and all of that stuff. And then I
Mhm.
walked down the street and I opened a bank account with one of the world's biggest banks. And I didn't even apply a climate lens to that decision. But the question, and now that we know more, is that was actually the most important climate decision that I made, and I didn't even apply a lens to it at that time. And so as we started learning about this, the question became, so when it comes to individuals banking, like, how does this activity compare to all these other climate activities that we take? And so, driving, flying, et cetera, where does banking fit into that? And if I were to move my money out of a major carbon intensive Wall Street bank into a more climate aligned bank like Climate First Bank, what is and we're going to use this term indicative, which is important, which is this is not a direct sort of one-to-one causal thing, case to make, but what are the indicative emissions reductions that I could achieve by moving my money? And then importantly, how does that compare to everything else that I should be doing as a climate conscious consumer? And so we set out on this research project. And what we ended up finding was that for many individuals, the emissions stemming from their cash and investments are one of, if not their largest sources of emissions. And so we basically went and used sort of best in class data to get an understanding of what were the annual emissions that stem from the average Americans flying, their diet, their residential energy use, their car, et cetera. And what we found was that just having $10,000 in a major Wall Street bank is going to generate over 4 tons of emissions per year. So that's larger than diet, flying, residential energy use. And when you start scaling all of this stuff up, you say, well, what if if I have $25,000 in the bank, what does that mean? And you can quickly see here how finance and this is once again just banking. This isn't even anything involving the money that you have in your retirement accounts or anything like that. How for individuals, how they bank and how they invest their money quickly becomes one of, if not their largest sources of emissions, especially as their wealth grows. And so then the natural question became like, all right, well, so if I were to move my money out of one of those banks into a bank like Climate First Bank, what would my emissions reduction be? And what we have found sort of across the board, and is very much the case with Climate First Bank as well, with these more socially responsible banks, is that you can achieve more than an 80% annual emissions reduction by moving your money for Climate First Bank. And so one of the pieces of the project that we just completed with Climate First Bank is that we took the data that we have been building for major Wall Street banks, and then we took the data that Climate First Bank was creating, and we worked to sort of review and validate all of that, and found that there is this massive divide. And so I hope all of you have $1 million in your bank accounts. I don't. These are easy, big numbers to use, but if you have $1 million in your bank account in an average Wall Street bank, you're going to be generating about 410 tons of emissions per year. And at Climate First Bank, that's just going to be 71. So to bring that down back to the individual level of $10,000, that's going to be 4.1 tons of emissions per year versus 0.71 tons of emissions per year. So an absolutely sort of massive emissions reduction indicatively that you can achieve by moving your money. And so, and once again, this comes to the last question of, well, how does this compare to other choices that I might make as a consumer? And part of what's great about Climate First Bank, who, if I'm correct, still offers the highest interest rate in the country, but a lot of these more values aligned banks actually, because they have to sort of compete for dollars, are providing actually much higher sort of return to depositors. And so what you'll quickly see is that moving $10,000 to a bank like Climate First Bank achieves almost the exact same emissions reduction indicatively as you would achieve by switching to an electric vehicle. But whereas you have to spend thousands and thousands of dollars on an electric vehicle, with $10,000 in your bank account, you'll actually make more money being in a more climate aligned bank like Climate First Bank. And similarly, that even just moving a few $1,000s has a higher indicative emissions reduction than these things that we often hear about, like eating less meat and installing solar panels, et cetera. All of these things, once again, are great. This is not a replacement to these things. This is intended to be very sort of additional, and just to illuminate that this thing that we have never really thought about as part of our climate consumer toolkit quickly become something that is not only something that can be very climate beneficial for you, but it's also something that is going to generate more revenue for you and be, in a lot of cases, much less disruptive than many of these other sort of pro-consumer choices that you might be making. And so, as I sort of come to the close here, I just want to point out the fact that the climate impact of this, as you can see, just only continues to scale as the size of your bank account grows. And so, if you're thinking about what this means for me or my business, the university that I attend, or the nonprofit organization that I'm on the board of, as the money grows, the impact only grows. And so the research that we did around individuals built on research that we had done previously for corporations. And so in 2021, we've started asking very similar questions around what this means for companies. And so it was a time not that long ago, but a world far, far away, where all of these companies were really ramping up their climate commitments, doubling down on their net zero emissions reduction goals, tightening what was, expanding what was in scope in terms of the number of things that they were looking at, and then really sort of tightening their goals and long-term commitments around it. And so we started just sort of saying, well, like, where does banking fit into this question, and how does it compare to the other emissions that they're already reporting? And then importantly, can we get banking to sort of tie into this emissions footprint that companies are doing? And if so, we have now sort of a forcing function and a mechanism to help companies start thinking about this more. And what we found was very similar to what we found for individuals, which was that for many of the world's largest companies, the emissions stemming from their cash and investments are one of, if not their largest, sources of emissions, but for many of the biggest tech companies, actually bigger than all of their other emissions combined. And so to quickly define what is in scope for that. So if you take a company like Apple, great company with a massive, very committed sustainability team, no means to throw shade here at Apple at all, but just to use them as an example, since I'm on an Apple laptop and looking at my Apple phone to keep track of time, like all of the emissions that stem from every use of an Apple product globally fits into their carbon footprint. All of the manufacturing, all of the life cycle production, all of the corporate headquarters, the flights that their executives are taking around the world, all of that is part of Apple's carbon footprint. And same is true for every other company. And for them, their banking and investing, which they were not looking at, as all of these companies weren't, was actually larger than their emissions that stem from everything else. And so what you see here in blue is this analysis. And so we have analyzed many of the world's biggest companies, and we chose them, frankly, because many of these are leaders in climate who have very good, robust reporting and plans in place to do this emissions reduction. So it created an easier way to create this comparison. And I should say some of this stuff, this numbers will negatively reflect the changes that they have already made, and is more a reflection, frankly, of like how much money they have and what their business model is. But for a company like Visa, which doesn't have a very carbon intensive business model, and they're a very successful company and they have a lot of cash, their banking and investing is 10 times larger than all of their other reported emissions combined. But even for a company like Amazon, which is shipping packages all over the world and operating all of these major facilities, their banking and investing proved to be one of their top 3 largest sources of emissions. And when you zoom out and you look at that through this macro lens of what is this opportunity, there's over $7 trillion alone in corporate cash and investments in this country. And the research that we have done has shown that that presents about 20% of the nation's total emissions. And so here, once again, is this massive opportunity to take the dollars that we are managing these are all climate conscious companies that are doing everything they can to pull sort of every lever at their disposal to advance the climate crisis. And when it comes to their banking, they just had sort of never thought of this as this lever. So, and I will pick on Tesla here because, they're kind of fun to pick on these days, but, and this is data that's a few years old, but we're going through and preparing. This one just sort of goes to kind of really hammer home the fact that whether we're talking about companies or individuals, how you bank and this sort of passive financial management can really undermine all of the other climate impact that you are trying to have. And so in 2023, Tesla sold 1.8 million vehicles. And based on, this is a bit of an extrapolation from some of the data that they have produced, but their annual emissions from their, that will be saved by those 1.8 million cars is 6 million tons of emissions a year on average. And when you looked at just the emissions that stemmed from their cash and investments in 2023 alone, the emissions that stemmed from that was actually larger than all of the emissions reduction that they will likely achieve year over year for all the cars they sold that year. And so once again, this is just to sort of show that the emissions that stem from our cash and investments are really substantial and in many respects can be working actively to undermine our goals and values around what we're trying to achieve, everything else that we're doing as an organization or an individual. And so I'll sort of close by saying that we were very fortunate that when we came out with these analysis, we got some very nice words from Bill McKibben, the climate luminary, who sort of praised this as uncovering the largest remaining source of huge and hidden carbon emissions in our economy. But the part of this that I think is sort of most apropos and most fitting for this and why we're all here today is that unlike, things like the melting tundra, which is also which McKibben equivocated our discovery to. Pretty hard for the average American or average individual to do anything about that. But when it comes to our banking and investing, we actually can do something about it. And so whether that's starting to work more and more with banks like Climate First Bank or engaging with your existing banks to get them to offer better products and services, there is an entire sort of field and practice and whole litany of activities that we can do as everyday individuals or as corporations to really start moving the needle on this. And so I'll close by saying that, when we tend to think about innovation, we think about these things very much through the lens of like these big technological leaps, and we need to build these massive factories that pull carbon from the sky, or we need to build these incredible electric vehicles that are so sophisticated that a heavy truck can, beat a Ferrari off the starting line. But at the end of the day, what we need more than anything is not big, sexy, or futuristic. It's actually these very interesting sort of nuts and bolts, frankly, like kind of boring financial products and services that are going to be able to unlock the capital that we need to move money at scale. And so I know Chris can talk all about this, but things like a lot of the fintech that Climate First Bank is created to help be able to deploy solar at scale by using innovative financial mechanisms to do that. Like that is what we need to be doing. And we need to be rethinking about how do we rewire the financial system through these innovative products and services to move money at scale into climate solutions. And so I hope that all resonates with you all, and say thank you so much for being here today. Thanks for being a part of the movement that we all are working to build here to sort of rewire the financial system. And I am going to hand it over to Rebecca, aka Bex, on our team, who's going to talk through sort of a deep dive into explaining how we came about creating a lot of the numbers and what is sort of sitting at the heart of these emissions factors that are so important in understanding the impact that we're generating through our banking.
Wonderful. Thank you, Paul. And thank you,
Thanks,
Climate
Paul.
First Bank. And great to be here today with you. My name is Rebecca Self, or Bex for short. As you've probably guessed, I'm originally from the UK. I now live in the Netherlands, work internationally. And my background is banking. So I started working in banking from the year 2000 right up through to 2020. That was in London and in Zurich, a whole variety of all sorts of different roles at large systemic banks. And about halfway through my time there, I had I had quite a bit of a wake up moment. And at that time, I was working on subprime mortgages and looking at foreclosed loans.
Hmm.
And this really made me start to question the industry, I question myself, and also start to pivot my own career towards banking reform and looking at regulation and then sustainability. And since then, for around the last 6 years, been working as a consultant on sustainable finance, carbon emissions, net zero, all sorts of other fun things along the way. For today, I have about a handful or so of slides, and I will go through the methodology and also some metrics that we use. It'll be quite general, And after this, I'll hand back over to Chris, and Chris will go through many more of the climate first metrics, so a bit more specificity. So on the next one, I'm very often asked by friends, family, people who have bank accounts, what sorts of metrics I look at when I'm thinking about banks and how I choose them. And these are just three. So the first one, very often I'll look to see if that bank is a member of different alliances. Is it a B Corp? Is it a member of the Global Alliance for Banking on Values, like Climate First Bank? So that's one indicator. Secondly, I take a look at the portion of the real economy financed, and this is just a proxy, but I will look at the balance sheet of the bank, and usually that's in the investor relations portal or looking at the financial statements of the bank, looking at the balance sheet, and I'll compare the total assets to the amount of loans and advances to customers. And there'll always be a difference, but that gives me a sense of how much lending that bank's doing to the real economy. So to real businesses, manufacturing, real activities. And that's quite different to what many banks do, typically in Wall Street, which is more trading, speculation, mergers and acquisitions, that sort of advisory activity. So for me, I look at that real economy finance. And then finally, and for the rest of the slides, we'll focus more on financed emissions. And so I'll also look at, do these banks report their financed emissions? Is it available in the annual reports? And also look at the PCAF website, and we'll dig into that in a little bit more detail too. On the next slide, so looking at those financed emissions and the method, here we're talking about scope 3, and it's category 15, so the area in the small circle here. And for most banks, this is the largest portion of their emissions. And in fact, there was a report by CDP in the last few years that said for an average number of banks, and there were thousands included in the study, their scope 3, category 15, is about 700 times the size of their other emissions. So the emissions from offices and electricity, for instance, are relatively small in comparison to this scope. It's indirect, it's estimated, it's indicative, and it gives a point in time. So again, it's a snapshot. On the next slides, the methodology that we've used to estimate those emissions is based on PCAF. And PCAF is the Partnership for Carbon Accounting for Financial Institutions. It's a global standard. It was created back in 2015 by the Dutch Central Bank around the time of the Paris Agreement. It's now used by over 500 different financial institutions all around the world. And on the next slide, some of the principles of PCAF. So this is focusing on the scope 3, as I mentioned, and it attributes emissions. So it will look at the activities that bank has, who are they lending, investing with, and what is the emissions of that counterparty, and then you take a portion based on the size of the finance. On the next slide, so I have a bit more detail on the calculation. And the approach that we used for this calculation was twofold. Firstly, where possible, we tried to use the best data quality that we had, and this is allowable under the PCAF standard. So that means looking at each transaction that a bank would have, where we have that data available. It would look at the counterparty, so the company or the real estate. It would have the emissions, usually self-reported by that company, and then we'll allocate the portion of those emissions based on the size of the bank's exposure. So that's a more detailed bottom-up approach. But we combined that where we had some data gaps to a top-down method. And there we would look at the aggregate balances of the bank, usually from their external disclosures, and assign an emission factor. And that emission factor is usually based on the EPA or CEDA. So there's a variety of external emission factor sources. And multiplying that gives the absolute emissions. Once we have those absolute emissions, we aggregate them for the institution and then we divide by the lending. So that gives a carbon emissions intensity that can be compared by the different institutions. And it's also to mention there are some emissions, for instance, arising from agriculture, public transport, which absolutely are in the system and are well known. So it's not to demonize all emissions in this instance, but it just gives that basis of comparison. On the next slide. So for many of the large banks, they will disclose these emissions, and the way that we calculated the Wall Street average, which we'll see in the next section, is by looking at the large globally systemic banks, which are headquartered in the US, and that's the Bank of International Settlements. And we then took those which had big retail operations and had an average for all of those Wall Street banks. And also perhaps briefly to mention here, when I'm myself looking at some of these disclosures by the Wall Street banks, I'll tend to look at footnotes and also some of the policies, what they don't lend to. And that can also be a useful indicator. And then on the next slide, and this is the final one before we dig deeper into the demo. So just with those big banks, they have facilitated a substantial amount of finance to the fossil fuel industry. And they're amongst the Wall Street banks themselves are amongst some of the top financiers of the fossil fuel industry. And that has been increasing more recently. And plus, is very likely with AI, data centers, models, that this will increase. So those emissions are expected to increase over time. And one thing that I'm keeping a beady eye out for is any disclosure, in particular from AI, to try and allocate some of those emissions. So keeping a lookout for that. And next, we'll hand over to Chris. Thank you very much, and dig into climate first.
Wow, that was tremendously insightful. Paul, Bex, thank you so much for the overview. I'm seeing other comments in the chat, and I agree. You know, our founding director Jared Myers mentioned that he's amazed at the impact of moving money over and has heard this presentation a number of times, but still always learning. I agree with that as well. You know, I'm going to go ahead and share my screen now to dive into a new exciting tool. And for a long time, consumers have had, you know, tools to help calculate the impacts of our driving habits, our diets, right? Where we're getting our power for our homes. But it's really about trying to uncover the impacts of moving your money that led us down this path of working with TopoFinance. So just a few months ago, we hired TopoFinance and Climate First Bank and our sister company, OneEthos, embarked on building out what you see here. And this is a new deposit impact calculator on the Climate First Bank website. Under our personal tab, you'll see our various personal banking products. And one of the tools now is this calculator. And the idea here is to provide kind of the indicative measurement of impacts of moving the deposits from an average Wall Street bank into Climate First Bank. And as you can see, you have both the ability of typing in a number or moving this slider here at the bottom. And ultimately, we're going to zero in on our average deposit here at Climate First Bank, right around $6,500. And as you scroll down by typing that in, you saw an auto calculation of some of the measurable impacts of moving that money and how much lower the carbon footprint would be, equivalent to, if I move $6,500 over, it's equivalent to two people moving their diet to being fully vegan and the carbon savings of that, of those two people eating vegan. Or 5,560 miles driven by an average gasoline-powered vehicle. 2.2 acres of US forest preserved in a year. And I often look at the flights as well, 7.2 single economy flights between New York and LA in terms of the carbon footprint that you're saving by moving your funds over. So the first aspect of it is just providing the social and environmental impacts of moving the dollars. And as you scroll down, you see that kind of emissions comparison visualized for you front and center. As was mentioned, the average Wall Street bank is around 410 metric tons per every $1 million versus our 71. And so this dynamically showed that, that $6,500 has about a 2.7 tons of CO2 in terms of its emissions in an average Wall Street bank and only zero point 0.5 tons of CO2 emissions at Climate First. And again, the emissions intensity of your dollar just sitting here versus it being at another bank investing in some of these more carbon intensive industries. The other amazing perk at Climate First Bank is we have some of the highest rates in the country. Climate First Bank is one of the fastest growing institutions that we've seen over the last 2 decades. And as a result, we're needing to, encourage and recruit new deposits to the bank to meet that loan growth. And part of doing that is having high yield interest accounts. So at Climate First Bank, we have a 3.26% impact checking account. We also have a 4% super duper savings account, very low bar account that you can open up with online. And simply by moving that $6,500, you could see the amount that you're going to make in earning that annually, that annual interest on those dollars. So doing well and doing good, right? Making more as well as ensuring that your dollars are being invested in the right way and they have the smallest carbon footprint possible. So we're really excited to get this tool out and encourage you all to mess around with it, to share it, with your network, and we'll be sure to kind of add it as a follow-up to the email to this webinar as well. So with that, I'm going to stop sharing my screen and come back to our webinar panel here and really wanted to start diving into some Q&A. I think that there was already a couple of questions that were asked in the chat. And so I'm gonna pick up on the first question that Mick asked. And it was around how have you or anyone else created a carbon intensity ranking of various banks similar to the bank analysis slide? Joelle, I don't know if you want to maybe elaborate on what you shared there, but let's start there.
Sure. I replied briefly, but basically, there's just in the US, there's more than 4,000 banks. And for each of them, possibly we could measure carbon intensity and the absolute carbon. Obviously, it will be quite a lot of work. So TopoFinance has analyzed a couple of banks, mainly the largest, for obvious reason, is that there's way more public information. They themselves disclose a certain amount of information with regards to sustainability, their own emission, their financed emission. Rebecca mentioned is not always complete. So we have a certain set of data that we've maintained. We did calculation a couple of years ago. We rerun calculation lately, but unfortunately, we will be very pleased that every bank just really disclose and be more transparent. But we have
and I
to
think
do it.
building on this question, I think it's around an index. Might you envision an index that is available to the public that kind of shows? I know at this point you've been doing, as Bex was talking about, kind of aggregating the different intensities and being able to provide an average for those kind of top Wall Street banks. But as you look to do individuals, it could be really informative to kind of have an index to understand kind of the differences in those intensities based on whether you're Wall Street bank, regional bank, local bank, etc.
Yeah, and part of the reason that we do some of the clustering is frankly just because the data quality of it is, so there tends to be sort of groupings. And so when we say the major Wall Street banks, they're kind of all within a similar range. And because there's about a tends to be, and Bextrel, some of them wrong here, but there's a bit of a margin of error on it. So they sort of all fall within the margin of error. And so rather than sort of putting it out individually, we sort of lump them together, because and to note also that, one of the important pieces of this work, and we focus on carbon intensity obviously here because it's sort of the biggest indicator and leading number, but it is not a great sort of holistic representation of the environmental and social impact of a bank. And so we have created a system that you can find on our website that we call the Climate Resilient Bank Evaluation System that Bex and Joelle spent countless hours creating that essentially lays out, it's designed primarily sort of for these major corporate treasurers who are working across major global banks around the world, but it breaks them down, I believe, based across 15 different categories, with carbon intensity being one of them, but also really looks at a lot of their policies, because part of what's important to note about banks is that, and one of my sort of favorite individual stats around this is that when the average American buys a new car, they own it for 8 years. When they buy a new house, they own it for about 13.2 years. When they open their primary banking account, they tend to keep it for 17 years. And so this is a
Wow.
long-term engagement that you're having. And so it's often more important not to just look at sort of one number in time, but to look at the trajectory that the bank is going and to analyze what their policies are, knowing that, this is just to reflect that carbon intensity is just a measurement of important time, and it's more important to know sort of where that bank is going as opposed to where they are right now. I mean, you need to factor both in. So
Yep. Excellent. At Climate First Bank, we're not yet ready to roll out our own credit card per se, but we have gotten a lot of questions about it. And so would love to get your take about how credit cards play a role in this data. Is the impact the same if you have a credit card for one of these Wall Street banks, but you're not necessarily banking with them? That would be interesting to share.
yeah, Bextrel, do you want to take it? I'm happy to take it. Or
Sure, I can start. And perhaps with credit cards, one of the areas that we tend to look at is the issuer.
Mm,
So we'll look at who the issuer is of that credit card, what sort of profile they have. If they're a bank, we're looking at the bank evaluation tool. There are some tools which will analyze the spend with a credit card, but that tends to be a little bit more personal choice. And
mm.
also there are incentives with some credit cards around that. But Paul, over to you to add.
yeah, and when it comes to sort of understanding the impact side of it, the carbon impact of a credit card is sort of fundamentally very different than the actual account itself. And so with the
Mm,
account, the money is, let's just say you deposit $10,000 into Climate First Bank. Climate First Bank is taking that $10,000 and they're loaning it out around the economy, or about 90% of that money. And so with a credit card, and that's where all the impact is happening. With a credit card, there are emissions associated with it, but it's much smaller because you're not giving your money to an institution to lend out. You are essentially,
mm,
using this infrastructure around it, and that is much, much less carbon intensive. And so when we think about credit cards, it's more a little bit like a book per se, which is like you can buy it anywhere. The emissions around it are going to be, and the impact around it, it's going to be kind of the same. It's more of like, do you want to support your local bookstore, or do you want to go buy it, through Amazon? And so that's how we sort of tend to think about credit cards and services around it, because it's more of a how the fees that the banks are generating around it and who you want to be in business with there.
hmm Very interesting. Yeah, we also saw that Visa on that slide, right? Visa had some of the highest in terms of financed emissions compared to their operational, over 1,000%, and just kind of really interesting point there as well.
And to clarify, that all comes from Visa's banking and the money that they make off off of all of the services they're providing. It doesn't, and so if anything, that I mean, and we need to go in to double check what they're reporting from their emissions side, but that is sort of only furthers the case that actually where you bank is more important. If the largest or one of the largest credit card companies in the world, their emissions from their banking far exceed the emissions from their operations.
Yeah, that's such a mind-boggling stat. I continue to go back to that because you think about all of the different aspects that go into making Apple products or just actually operating a financial institution and to have hundreds of times more of your footprint be in the financed emissions component versus your actual scope one, scope two is just it's truly eye-opening for sure. At Climate First, we are, constantly reporting our impact. We have an annual impact report we publish, and as we move forward, we're about to publish our first climate action plan and begin reporting on a regular basis. Bex, this might be a good question for you, but how might businesses incorporate deposit emissions into their overall sustainability reporting itself? What's the best way you see them doing that?
Yeah, so what we would sort of suggest is look at it. So with the financed emissions, look at it as an indicator, calculate it, look at the intensity. It can be incorporated into internal meetings and that sort of thing,
Hmm.
and decisions. But when it comes to aggregating up the emissions, so scope one, two, three, and then the scope three category 15, probably wouldn't suggest aggregating it all together in total. So
Mm.
use it as an indicator, but not adding it all up. And I think I noticed there was a question around some of the challenges. And one of the
Hmm.
reasons for not aggregating is partly because there is some double counting in there, and that's known, that's an issue with greenhouse gas emissions. And it's fine if you look at everything separately, but if you start to add up all of those scopes of emissions, that's where it can become a bit more of an issue. And I think
Hmm.
probably one of the other pieces to mention there, just around the challenges with calculations, is, and we mentioned it a few times, it is that these are estimates. Wherever possible, we try to use auditable, self-reported information from the
Hmm.
organizations that we're looking at, the best quality we can find. But we do recognize there is some estimation in there. And then to some extent, there's a different question to ask, which is, really how sort of precise or right does this need to be for the purpose, which is to serve as an indicator. So I think there's with calculations, you can sort of go on a big loop and go round and round and round and become very, 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 very detailed and precise. But again, there's perhaps that consideration of how precise it really needs to be for this indicator purpose.
That's helpful insight, and we'll certainly try to use that as we go to publish out our first plan here. But yeah, I think it's important to, especially because obviously the difference between us and a traditional Wall Street trading is so drastic, that I think it is a really important point to share about how we're driving impact and how you can have just a positive impact simply by just opening up an account with us. So I thought that was helpful. Last couple questions here, and then we'll close out here. Um, do you plan a switch your bank campaign? So we had a question from Deborah about switching our bank, and Deborah, yes, we are, in September of last year launched an effort called Banking for Good, which is a campaign to really try to recruit mission-aligned nonprofits, businesses, and other institutions, and we have seen a real increase in those organizations that are banking with us. Today, we have over 200 501(c)(3) nonprofits, as an example, that are doing their full banking with us. And as of this week, with this new impact checking product that we just launched, as part of this whole campaign of the calculator and all of that, is the impact checking product now is combining a few different features and will allow every customer that opens up the account to have the bank donate $100 to a selected charity of their choice. And those charities are out of all of the organizations that are banking with us. So it's another perk, it's another incentive for organizations to make the move, because you'll be eligible to receive those donations upon account openings for those that select them. And we're always open for other ideas, but certainly, yeah, I think hopefully with this new product, we could start to see a lot more interested people wanting to do well and do good. And the last question I have here is the panel open to disclosing who they themselves bank with? As you can imagine, on my end, I do my full banking, my family's banking, and everything here at Climate First Bank. Um, want to see if anyone else is willing in to sharing.
I can perhaps share a little bit. I won't name the bank, but for most of my banking activity, it's a Dutch bank with three letters. So that probably tells you one of a few, and it's one of the very big ones. I
Okay.
have engaged with them, so I've engaged with their customer services. And then I also have money in like a fintech as well. And that's much more dedicated towards green, and it's just due to the types of services that I use, and also being an expat as well. The other piece that I do,
That's fair.
just more on the investing side, is just make sure looking that the asset managers and so on are members of those alliances, and also crowdfunding to have some dedicated sort of green and climate options, and that's a whole variety of
I
different
love that.
providers.
I love that. That's such a good idea for sure. Joel, any on your end?
I use the same banking as Rebecca for our business, um, as we work together. So using the same one, and another one which is also offering green product. We unfortunately we can't unless we move to the US, maybe, or maybe when you open a branch here in the
When we
Netherlands,
get our
I
international
think it will
charter and we can start scaling,
be.
that'd be
Yeah,
awesome.
it would be a great sign to see. But we have there are banks, and for people who can't, if there are people on the call who can't access or can't work and interested in ethical bank, Climate First Bank is part of is the Global Association of Banking with Values.
Yes, Global Alliance for Banking on Values. That's correct. I was going to
And
put that in the chat for everyone as well. Yep.
and yeah, and they have institution in many countries in and very interesting institution. And those are all banks who sign up for very strict. And Chris, you probably know better the condition, but they signing up for very strict ethical rules, and they will not finance certain things. They will not engage with certain type of businesses, and yeah, they have in the status they have objectives towards sustainability, towards people, and yeah, can only encourage people to privilege those institutions.
Good plug there, Joel. Yep. GABV, certainly a big deal.
Yeah, and then just for me, so for the organization, so we have a bit of a weird structure in that we're fiscally sponsored, so we cannot control our own banking as an organization because of that. So not choices that I get to make, but we are previously fiscally sponsored by an organization that was banking at Chase. And part of the reason that we moved, amongst other reasons, was we moved to a great fiscal sponsor called Earthshare, who banks with Amalgamated. So Chris and I were chatting the other day about how we might be able to work on sort of creating a little bit more control around some aspects of our banking within that, so that we could be able to bank more with Climate First Bank. But the yeah, but so that's what we do organizationally, and both
Sweet.
fortunately and unfortunately, our professional account, Topo account, is much bigger than my own account. So great that it is, considering how small my personal account is, but certainly would love for my personal account. I wouldn't complain if that got substantially bigger. But I am terrible at life administration, so don't use me as an example for what you should be doing. I also have been, but we've actually been working on sort of creating our own sort of fintech solution that we've been talking to Climate First about for a while. So that was like always a few months away from being ready. So I was sort of planning on breaking up my banking within the sort of ecosystem that I had, and then using this product. But that product has now sort of been put on the back shelf. So I'm in the process now of going through and doing sort of it's a good impetus for me to get my stuff together here over the summer and make a more aligned decision around all this stuff. So
Fair. Thank you all for being transparent about that. And
actually
we're
the first time I've been publicly had to answer that question and all this time, which I've been mortified to do, which is also why I let Bex and Joel go first, to be honest, because I'm not Yeah, do as I say, not as I do when it comes to that. But as I jokingly
Well,
tell,
we'll change that up with you, Paul, here soon, and we got a good impact checking product ready for you when you're ready. And to Mick's question, asking about whether Climate First Bank is able to serve customers in all 50 states, the answer is absolutely. We are licensed and lending in all 50 states. We have customers today in all 50 states, as well as Washington, D.C. and Puerto Rico. And really, with the power of the technology that we have, our mobile banking and our online banking platforms are state of the art, and they allow you to do literally everything that you would need in order to facilitate your financial transactions and banking. So with that, I think one key takeaway for me in this conversation is that money is never neutral, right? Every dollar that we deposit in a bank happens to shape our economy, our community, and the future that we're collectively building here. And, I think as Paul shared, for decades, we've been focused on the impacts around what we buy, what we drive, how we power our homes. But hopefully this webinar provided you some insights in realizing that where we bank and hold our retirement accounts can be just as important, if not more so. As shared, Climate First Bank, your dollars not only have an 83% lower carbon footprint compared to the average Wall Street bank, but the dollars are actually being invested in advancing positive change, right? Financing clean energy projects. Last year did over $275 million in just residential solar across 44 states, over 5,600 households that we helped to finance to move towards clean energy, right? That money is going towards affordable housing developments and small businesses. Today, we are a top 40 SBA lender, helping small businesses nationwide with getting lines of credits or acquiring their next facility, et cetera. And we're also helping worker-owned cooperatives, right, move from private to cooperative type of developments. And I think in addition, you'll make more in interest revenue coming here. So in closing, thank you, Paul, Rebecca, Joelle, for the partnership, the insights shared, and the leadership in this space in advancing climate resilience finance. And a big thank you to everybody who joined us today. Really want to encourage you to explore more our Climate First Bank Deposit Impact Calculator. You could find that on our website, climatefirstbank.com. Please find out more about TopoFinance at their organization site, topofinance.org, and consider how your financial choices can help drive climate solutions forward. Together, I'm really confident that we can truly change finance to finance change. And with that, thank you. Talk soon.
thanks so
Thank
much, everyone.
you.
Pleasure.